Wells Fargo seeing a glimmer of hope in one of the mortgage lenders. Wells upgrading Rocket companies to overweight, hiking its price target to $10, boosting the stock by about 5% today, but shares are still down about 40% this year. Joining me now, the analyst behind the upgrade, Don Fandetti, equity research analyst for consumer finance at Wells. Don, why? Why this one in particular?
Yeah, good afternoon. So, look, we've been pretty cautious on Rocket. It's a very tough time in the mortgage market. We think, as you mentioned, the stock's down 40% this year. We actually think Rocket's going to be a major beneficiary of the market dislocation. We think they can take market share. We also expect capacity to come out of the industry as mortgage originators sort of pare back capacity on the lower volumes. And that's going to be good for gain on sale margins. And the other element is investor sentiment can't get much worse for the mortgage industry. Investors are very bearish on this stock. And as we all know, you can't make money buying stocks that everyone loves. So that was kind of the genesis behind our upgrade.
Now, affordability still horrible, but inventory starting to creep up. You mentioned that Rocket has been a pioneer in digitizing the market. How does that give them an advantage in a market that's still unaffordable and where, I don't know, interest rates don't necessarily beckon to people come ahead and buy something expensive right now?
Yeah, look, it's a tough market. I think it's going to be a tough market for equities in general. You have the Fed essentially taking all the excess liquidity out of the system. Asset values are going to go down. I do think the consumer's in pretty good shape, or at least coming into this in a good position. Our base case is zero. I mean, zero GDP growth. So whether that's a recession or modest GDP growth, it's hard to say. But I would say, we're looking for companies that are going to be winners over the long haul. And we think Rocket can be a consolidator. They're the most efficient company in this space. And so we think that even though the market's brutal right now for originators, we wanted to take the contrarian bet and look forward 6 to 12 months and say, who's going to come out of this stronger? Who can take market share? And we think that's Rocket. And that's, the main reason why we think we're bullish on the stock. But certainly we've gotten a lot of pushback from investors, just given that it's going against the grain here.
Yeah, your coverage universe is nice and broad in finance. So I wonder what you expect to happen with maybe the bulk of consumers as interest rates rise. Do people kind of shy away from taking on more credit card debt and actually do more refis for the stuff that they actually have to buy because the interest rates, while higher, are still lower than they would be on that other type of credit? Who benefits in this environment?
Sure. Well, Rocket's been benefiting from a lot of cash out refi activity as home values have appreciated. We think some of that will cool off and investors will move more towards home equity. I think Rocket will, dabble in that as well. But, we alluded to this earlier about the consumer. You're sort of at a tricky spot because balance sheets are very good. Debt to service, debt to income to debt ratios are very strong right now. But look, there's going to be some impact, right? You have the Fed raising rates. We cover a lot of the card issuers, and you're seeing some change in behavior on the consumer. And so some of the things we're watching, your stock portfolios are down 30% on the tech side. We think that could go lower. Housing prices, our view is that there's no home price appreciation at this point. And I think we're watching to see if that really rolls over, and that could make us more cautious on the consumer. But right now, I think it's a little premature to get too bearish on the consumer.
Okay. That's kind of nice to hear. Don Fandetti with Wells Fargo. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.